Hi, I'm Monk and this is the Monk Way. Let's have a deep dive on Aurora Cannabis. We'll look at the latest numbers, all the details of their factories and production, and possible future growth of ACB and the whole MJ industry. This should tell us if they're a good investment right now. I'll also show you guys my personal investment in them. But don't buy this stock based on this video. Do your own research and make your own decisions. Subscribe, hit that bell, and leave a like for more MJ videos. I make these every time there's big news. And check out Monk's Market Mastery in the description below, a fully animated course on the stock market for half off, but only for a few more days. I also recommend Webull as my favorite free investment app. It's 100% free to trade and no account fees. What I really love is their full after hours trading. This means 4 AM to 9 PM. You get 9.5 extra hours to trade with. Robinhood only offers 2.5 extra hours. This lets you swing trade MJ stocks almost anytime you want, with incredible analysis tools on every single company. They also offer 2 free stocks worth up to $1,000, one for signing up and one for depositing some money. Link in the description below the video. Let's start with a simple look at the stock price movement. This is the chart for ACB for the past 5 years. We saw a huge spike of 385% when marijuana was announced to be legal, going from $2 to $10. It dropped down after the hype died down a bit, then spiked up 128% around August 2018, all the way until MJ was actually legalized here, October 2018. The hype went down again until January 2019. It slowly went back up, but now it's going back down again. A rollercoaster ride for green investors. We are on a 61% dip from its recent highs right now. They have a market cap of $3.73 billion. So the company's total worth is $3.7 billion. Just as a comparison, Canopy Growth is the biggest MJ company at $6.74 billion, almost double the price of Aurora. Cronos is $2.63 billion, third place right now. Aphria is another popular one, only $1.19 billion, 4 times smaller than Aurora. So Canopy is on top, then Aurora, then Cronos, then Aphria. Let's compare the price to sales ratio, telling us about the revenue made, no profits yet. I had to calculate this myself for accuracy. Since Aurora made $250 million in the past 4 earnings reports, dividing their market cap of $3.73 billion by $250 million, we get a price to sales of 14.9. For a fair value, under 5 would be amazing. The market average is 2.2. 14.9 is pretty high, but they were closer to 100 in the previous year, meaning they're earning a lot more revenue right now, but investors are giving them a lower price for more revenue. Canopy Growth made $290 million in the past 4 quarters, giving them a price to sales of 23.2. This could mean investors are valuing Canopy Growth higher, but this is likely due to them having an extra $3 billion in cash from Constellation brands investing in them. Subtracting $3 billion from the market cap, Canopy Growth and Aurora Cannabis would be about the same price, $3.7 billion. These two are on a tight race for the first place. Looking at the balance sheets, we see $360 million in cash, $664 million total in current assets. This means they have $664 million they can spend in under a year, and $2.3 billion in total assets, not counting goodwill. $395 million in debt, which is not too high. So we can think of it like this. Aurora has about $664 million in cash on hand to buy whatever they want with, and all the equipment, plants, copyrights, and patents are worth about $1.6 billion total, giving us this $2.6 billion total worth. And they have $1.1 billion in liabilities. This is money they have to pay back, giving us $1.2 billion of equity, or total money they have after debts are paid off. This is not bad. A price to book of 3. I would say Aurora is a fine value as a speculation stock, if you don't care about profits at this time. They actually lost $230 million in the past 4 quarters. But compared to a company that is profiting, this is still a high-risk, low-value company, like pretty much all MJ stocks. If you're enjoying the animation so far, please hit that like button. This video actually take more than 10 hours to make just for 10 minutes. Research and script took 3 hours, voiceover and editing took 2 hours, I actually stumbled my words a lot. Animation took 4 hours, not counting encoding, and a few more hours of work to finish it up for YouTube. It's hard work, but leaving just 1 like makes it all worthwhile. Subscribe too, because I make these animations daily. Let's move on to Aurora's current and future plans. Looking at their latest earnings reports, they had $98.9 million in revenue, a nice 52% increase from last quarter, and a 418% increase from before legalization last year, and they produced 29,000 kilograms. So things are going up at good rates. Basically, they made 4 times the cash before marijuana was legalized, and still increasing every quarter. They have 15 production facilities. This is where all the weed is being grown. Very important. So let's take a deeper look. The first 3 smaller sizes are all operational. Aurora Sky, at 800,000 square feet, is fully operational, making over 100,000 kilograms a year. Aurora Sun, which is double the size, will actually be producing 230,000 kilograms a year. It will be finished by mid-2020. Denmark has a smaller place that's finished, but Nordic 2, which is 10 times the size, is coming in mid-2020. Then we have 3 smaller places, all working. Exeter, which is pretty big, was just purchased. I assume this might take into 2021 to be finished. And we have 3 smaller places, all working, along with a small place in Portugal, coming soon. If we do the calculations based on this, we can see how much they can produce at this time. 4.8 thousand, plus 4,000, plus 4.5 thousand, plus 100,000, and so on. This adds up to 200,000 kilograms per year, which is about 50,000 kilograms per quarter. Just as a reference, they produced 29,000 kilograms last quarter, meaning about 60% of their maximum capacity, and they sold only 17,000 kilograms of that 29,000. They still have an extra 21,000 kilograms they could be producing per quarter. But what's important is what's coming in 2020. Accounting for the factories coming, we have an extra 350,000 kilograms per year. That's almost triple what's currently possible, giving us 550,000 kilograms maximum. 660,000 if you count Exeter, which has no scheduled finish date yet. Theoretically, if they can produce around 500,000 kilograms a year, that's 125,000 kilograms a quarter. This is 4 times the current revenue. I can't say for sure, but if the revenue were to 4 times, then I think their price will likely double. This is all speculation, so definitely don't buy this stock based on this video. The issue is production is higher than what they can sell. They sold 17,000 kilograms on 29,000 produced. This could be because Canada is not selling optimally. Many stores aren't getting the supplies due to slow regulations. But with legal edibles coming up, sales can definitely pick up. They are active in 25 countries, including Canada, Mexico, Brazil, UK, Spain, Germany, and many more. And they are ready to provide for the whole world, including Europe. The Canadian market is the main focus. But if they can expand more into the other side of the world, we might see a lot more revenue compared to other companies that are only focused in Canada. They have just announced a new line of products, including vapes, concentrates, and what I'm excited about, edibles, which are now legal in Canada. This will definitely boost revenue in the coming year. Aurora is making edibles including gummies, chocolates, baked goods, and mints. The edibles market is expected to be worth $2.7 billion a year. Let's compare this to the $1 billion made so far from all the legal MJ sales combined in the last year. Of course, legal sales will keep growing from here, along with edibles. We will likely only see a boost in revenue in 6 months or longer, so prices aren't spiking just yet. It's definitely a good time to look into MJ companies before this revenue spike. We also see a nice growth in medical patients. This chart shows it went from 20,000 by the end of 2017 to over 60,000 last June, to over 80,000 in June 2019. This is an extremely high increase in patients, giving them almost guaranteed revenue. Moving on to possible future money made. Here's the possible revenue for the entire market. We see $3 billion a year for medical patients, $9 billion for recreational Canadian customers, over $70 billion for the global medical patients, and over $115 billion for global recreational. Basically, there's a huge market of over $200 billion a year. As a reference, Aurora only made $250 million in the past year, meaning that scale for growth is 800 times what they're making now. But these are just estimates for the total market. Aurora has about 20% of the Canadian market right now, but even at 20% of 200 billion is 40 billion, 160 times what they're making right now. The potential for growth is incredible at this point, but I would say these numbers are just in theory. Let's look at the European markets, which can put them ahead of their competition. Europe has a population of 460 million, with 98 billion possible revenue. Aurora is supplying countries like Germany, Denmark, Malta, United Kingdom, Italy, Czech Republic, Luxembourg, Poland, and Portugal. They do seem like the leader in supplying the East, so this can give them an edge in the future. Here's their strategy moving forward. Drive down costs through their scale. This means reducing the cost to produce MJ, leading to actual profits in the future. Being a leader in the global markets, meaning supply to European countries, giving them the edge. More research and development. They want more products with better margins, so research is required for that. Higher quality products for a better brand, meaning an increase in recognition of their Aurora brand, giving more repeat customers. Increased margins through products like vapes. More medical patients globally for better margins. These are all solid plans. That sounds very logical to me. Here's my investment in Aurora Cannabis. I have the Canadian version with an average price of $7.41. It's at $4.81 right now, so I'm down 35%, or $8,300. With over $23,000 investments, this is definitely a huge amount of money to put in this risky company. About 5% of my portfolio. But the fact that I haven't sold tells you how much I believe in them. Realistically, I don't think they will drop any more than 10% at this point. The low price right now is really unjustified. I can see Aurora Cannabis and Canopy Growth going up quite a bit, anywhere from 100% to 500% in the coming years. As long as revenue keeps growing, and as long as their new plants keep going up, production will go up 3 times by 2020 alone. Can you imagine them making 3 times the MJ and staying at these prices? I personally can't, but I'm not at all recommending you buy this company. It's extremely high risk and you can lose all your money. I'm also waiting for legal edible sales to boost revenue. This should be accounted for by 2020, maybe around June. Another big catalyst is a huge investment from a drink company. We heard Coke might be a partner, but that hasn't happened. Maybe another beer company would be great. Imagine $1 billion investment, boosting market cap, and giving Aurora a huge room to expand however they wish. I can see them buying more companies and being the leader in MJ, or just buying more facilities. They do seem like they have the highest technology of all MJ companies. In terms of the future, I can see myself buying more shares. But since I've been buying for a while, I'll only be buying about $5,000 more, unless I see some huge positives. Because the risk is definitely there. If edible sales and recreational sales don't pick up, and somehow it starts dropping more from these current levels, the entire industry might be too weak to justify higher prices. This is the reason MJ stocks have been dropping. Sales are not as high as people were expecting, and Canada's regulators are very slow in terms of new MJ stores and maximizing buying out production. These issues should be fixed over time, but nothing is for sure. And this is the risk you're taking when you invest in any stocks without profits. You are betting on everything working out, and more revenue coming in, better margins so profits appear, and regulations staying good for the MJ industry in general. Another huge catalyst is worldwide legalization. If these companies actually provide to America, they'll be making a lot more money. Legalization is already happening in many states. We just need the whole country to make the change. This could be a very long game if you want to wait for that. This is why I see the stock as a 5 to 10 year play minimum. I don't care if I'm down 40% because I'm waiting for many more years. And hopefully, I'll get some nice profits later. Until then, I'll keep up with the news and keep you guys updated. Subscribe for the next big news on Aurora Cannabis. I'll definitely make an informational video about it. And if you learned something new, check out Monk's Market Mastery below. It's a fully animated course on sale for 50% for a few more days. You'll definitely learn a lot more about investing in general. And check out Webull if you want the best swing trading app. Subscribe, hit the bell, and leave a like for more investing videos. I make updates on MJ every time there's big news. Keep watching Investing Green, the Monk Way.